Welcome back to our channel. Now we are discussing on shell companies, CSR audits, and ESG compliance. These issues were discussed in Rajya Sabha, and we will see the response of Ministry of Corporate Companies. The questions: are shell companies still operating under the radar? Do listed companies need CSR audits? And what about penalties for violating ESG norms? Recently, the Ministry of Corporate Affairs gave very clear answers in Rajya Sabha. First, we will see on cell companies, MCA clarification and strike of drive. First, the ministry has made it very clear that there is no legal definition of shell company in the Companies Act 2013. However, the Act does have strong provisions to remove inactive or non-operational companies from the register. We will see the provisions. Section 248, subsection 1. The ROC can strike off the company if it has not carried on any business or operations for 2 consecutive financial years and has not applied for the status of dormant under Section 455 of Companies Act 2013. This is one section 248, subsection 1. This also applies where subscribers have not paid their agreed subscription money within 180 days of the incorporation, as per Section 10A, subsection 1. And recent action, if you see, the MCA periodically carries out a strike-off drive to remove such companies. The most recent drive in financial year 22-23 and between financial year 2023 and July 16th, 2025, more than 40,000 companies were strike-off under Section 248, subsection 2. 248, subsection 2 allows the companies to voluntarily apply for removal after clearing all liabilities. This is what Section 248, subsection 2. We'll see the state-wise snapshot, 3 states for strike-off in this period. Maharashtra, 8,329 companies. Delhi, 5,873 companies. And Karnataka, 4,803 companies. Top 3 states for strike-off during this period. So this shows MCA's focus on cleaning up registry and tackling inactive companies. And second item, CSR audits, impact assessment requirements. Let's talk about corporate social responsibility. There is no separate, this is a misconception that there is no separate CSR audit requirement for listed companies under Companies Act 2013. See, the law applies equally to listed and unlisted companies. There is no bifurcation regarding CSR. Rule 8, CSR Policy Rules 2014. This is the actual requirement. The company's average CSR obligation in the past 3 financial years is 10 crore or more. It must undertake an impact assessment of CSR projects. Projects must have an outlay of 1 crore or more. They must be completed at least 1 year before the impact study. The assessment must be done by an independent agency. Reporting, yes, impact assessment details, CSR activities, and annual CSR action plan must be disclosed in the annual report on CSR. This is part of board's report. All CSR expenditure data is publicly available at csr.gov.in. Third item, you will see ESG violations, MCA's position. Now, here, where many companies get confused, ESG, that is environmental, social, governance, as a term is not specifically mentioned in the Companies Act 2013. But the spirit of ESG compliance is embedded throughout the Act. We'll see the provisions where CSG related in Companies Act. We see Section 134, Section 149, Section 135, Section 166. Section 134, subsection 3M, disclosure on energy conservation in board's report. This is a ESG item. Section 149, subsection 1, requirement for appointment of woman director in certain companies, ESG item. Section 135, CSR, corporate social responsibility obligation, ESG item. Section 166, duties of the director, including acting in the best interest of stakeholders and the environment, including the environment. This is an ESG item. maternity benefits, related disclosures under the various provisions. So the action on violation, if any company fails to comply with these statutory requirements, MCA initiates appropriate legal action under the Act and the rules made thereunder. So the takeaway is, don't ignore dormant status. If your company is inactive, either apply for dormant status or face strike off under Section 248. And CSR obligations are serious. If your CSR budget is 10 crore or above, prepare for impact assessment. And ESG is not an optional. Even if the term is not there in the Companies Act 2013, its principles, ESG principles, are embedded in the compliance requirements. We have two channels, RR Corporates, other channel RR Legal Talks. Please do subscribe, hit the bell icon so that you will not miss any of the latest videos and the latest updates. Thank you.